Welcome to Channel's Business Globe with me, Juliana Olayinka, from Washington, D.C., where I have been all week attending the spring meetings of the International Monetary Fund and the World Bank. It does appear as if Africa finally has a seat at the table. And of course, as to be expected, discourse has centred around debt financing and climate change. Coming up on today's show.
But we are looking also to the space of the continent in the real sector.
We can also be able to export labor from Africa to Western countries.
Distributed solar energy is the fastest, most affordable way to get people connected to basic energy services.
Of course, communication was also very key, and it has to also be sequenced. And I know that at the outset, there was concern that one was not saying enough. But there was a strategy to that, because I felt it was important to, at the outset, come out and say things you needed to say when you needed to say them. And I recall that at a particular forum, which was the Chartered Institute of Bankers, which is held on a yearly basis, I used that opportunity to communicate very strongly. And normally, that is a forum that perhaps, the governors talk for maybe 15 minutes, half an hour, and I took over an hour. Okay, but I made sure I got everything, including giving forward guidance with respect to the banking sector, and to let people know that we were going to have a recapitalization exercise. This was in November, and the guidelines didn't come out till just recently, so they had plenty of time to start thinking that through. So these are some of the sequences that we went through. In terms of what kept me, some of the issues that one was concerned about, and how did I approach them and all that, there was a lot of worry with respect to the excess money supply, and one had to take bold measures with respect to mopping up liquidity, and then subsequently, of course, hiking interest rates. And I know that the first monetary policy committee meeting we had, I did a 400 basis point increase, which was unprecedented. But we had to do it. We had to do it. We had no choice. And we followed that up with another 200 basis points. And we had to do that also, because to the extent that we'd committed to price stability, we were convinced that we had to do whatever was necessary to ensure that prices and inflation the right steps were put in place to ensure that we got there. Now, in saying all this, it's also important to recognize, and I say this all the time, that whatever policies you make, if they don't impact the man on the street, then you've not done anything.
Well, I think what we're looking for in terms of the economy overall is stability in the key macroeconomic indicators. Because it's when you have stability and predictability to a reasonable extent that investment can come in. And when we talk about investment, we are looking here at domestic investors. We're looking at the private sector in Nigeria investing in enterprises, investing in machinery, investing in raw materials that increase productivity, grow the economy, create jobs, and reduce poverty. And so it is not so much that we're looking for low levels, but we're looking for stable macroeconomic environment in which the private sector in particular can be encouraged to come forward and invest alongside government. And one of the other important conversations that has to occur is that having stabilized the economy, that investment needs to come. And one of the ways that we can that we can quickly grow this economy is emphasis on infrastructure, including housing. Those are the key drivers of an economy that quickly enable activity to ramp up. So it's important that we find the funding from private sector, from government, from private-public partnerships, as well as foreign investors that go into these sectors, which are real key drivers of the economy. And one of the social benefits also is that if we provide mortgages, reasonably priced mortgages, we can have a housing construction boom that will take us close to the kind of growth levels that Mr. President is committed to taking Nigeria. The messaging that I think Nigeria is keen to get across is that we have undertaken reforms, we are committed to staying the course, we are focusing on interventions that ameliorate the cost, particularly to the poorest and the most vulnerable. But these costs are there, and they have to be managed and minimized. But that is the way in which we can grow the economy. And as for the multilaterals, it's an important arena in which to discuss funding of development generally. It's an important arena to discuss climate change, and the fact that Africa, along with the rest of the third world, has only minimally contributes to the problems of climate change and global warming, and yet disproportionately suffers the consequences. So we are here, amongst other things, to discuss a just transition and an improvement in the international macroeconomic framework by which, and the rules by which international finance is I would say, by which it is dispensed around the world.
It provides an opportunity for us to engage with some of our key stakeholders, the World Bank Group and its affiliates, including the IFC. These are institutions that Nigeria has very strong relationships with, and they are also a part of our ecosystem in terms of the programs that they finance, including our investment programs as well. There is also the discussion around how to monetize our assets that are ongoing and have been of key interest, not only to the global community, but also to the World Bank as well. And that's part of the agenda during the spring meetings. How do we begin to financialize the assets we have? How do we begin to optimize state-owned enterprises? And as you know, these are things that are well within the MOFI mandate. And those discussions have started, and they will continue for us to see how we can engage in these activities to support the administration's economic agenda.
What would be a successful week? What would be the takeaways?
Well, one of them is really pushing the envelope in terms of what types of programs we can engage in. I mean, I will speak specifically for the thing that relates to MOFI in terms of how do we begin to look for innovative and creative ways to increase the fiscal buffers through these investments that we have under our purview. The second will really be around engaging the global community, including the Nigerian diasporans, to see how we can leverage on some of the diaspora remittances that are available to us, but in a very structured manner as investment vehicle. I think being able to do some of those will be very, very central, and we would consider those to be successes. You know, I think first of all, we have to recognize that there is some indication, there are a lot of indications that a lot of these interventions and some of the reforms that are being undertaken by the administration, especially the economic team, are beginning to pay off. We're seeing that already. And we'll continue to see more of that. But I think it is important to also bear in mind that some of these reforms do take time to take hold. And but what I'm confident about is that a myriad of these intervention programs, these reforms that are being undertaken at the moment will definitely yield great results in terms of ensuring that inflation is brought under control, Our exchange rate is also stabilized so that people can actually plan for their businesses. Investors can actually plan, make medium to long-term plans based on that. We would also expect that the productivity would also go up so that we can increase supply, which in turn would impact some of these macroeconomic indicators. But I'm very confident that with a lot of the measures that the administration is leading would yield good results, not only in the short term, but in the medium and long term.
Thank you very much. It's a great opportunity to be here, engage with important partners on development issues, reflect on the status of the economy, on the need to mobilize resources for development. As a sovereign wealth fund, we not only focus our portfolio investing in securities, but we are looking also to the space of the continent in the real sector, in areas where we can impact into the life of people, whether in agriculture, whether in the healthcare sector, whether in the industry. We have a portfolio spread across the continent in hospitality, in mining, and in ICT. And in Angola, we are focused on forestry, on healthcare, on agribusiness, particularly on animal protein, back to production of grain. And we are also focusing into cash crops, particularly exporting production of avocado for exports.
In this aspect, we are now trying to look at how countries which are highly indebted can actually come out of debt distress, which is very key because that's, I think, an animal that is troubling many African countries. And then we are also looking at areas that can give us additional revenue from non-taxable revenues, which can lead into economic diversification. These are areas which are probably very new, like carbon financing, in which we can be able to get resources and utilize resources within the context of climate change management. We are also thinking about quite a number of issues like utilizing the mineral deposits that African continent have, which haven't helped African continent to improve and develop the GDP. So the 1 week that we are here in Washington, D.C. is very beneficial to African countries because we are also creating a platform under which African countries can negotiate with advanced economies in order to reach a compromise where we have to have grants instead of just depending on aid, because aid is actually putting us to sink into the deep molars. So basically, these are some of the issues that we African finance ministers are interested in, both IMF and World Bank. But let me take this opportunity that Africa, Malawi, as well as Nigeria, has the human capital, well-disciplined and hardworking, that we can also be able to export labor from Africa to Western countries, where we can be able to share skills and knowledge. And in so doing, we can also be able to impact the African economies through diaspora remittances and engagements. So these definitely are some of the key issues that as African ministers we are interested to debate on.
Well, as you can see, the Nigeria delegation led by the Honourable Minister of Finance have been really busy, and they've actually come into this meeting on a high because on Tuesday, of course, the IMF upgraded Nigeria's growth forecast for 2024. Good news. Coming up on Channel's Business Global.
Distributed solar energy is the fastest, most affordable way to get people connected to basic energy services.
It's in the best interest of the distribution company to collaborate and work with the mini-grid companies.
We don't want to be at the table just talking. We're demanding solutions, outcomes, and proactive frameworks.
All of this after the break. Do stay with us. Welcome back to Channel's Business Global with me, Juliana Olayinka, live here in Washington, D.C. for the spring meetings of the International Monetary Fund and the World Bank. Now, away from financial discussions, there has been a lot of conversations about lighting up Africa, access to electricity in sub-Saharan Africa, and the adoption of solar power energy.
If you could just reduce it to one main challenge in Africa, what do we need to do? What is this thing that we need to unblock so we can do what Hassanein is asking us to do? And more importantly, how does that get us to universal and enlarged, widened energy access on the continent? However, the mini-grids they're more nimble, they're able to easily deploy the solutions. So it's in the best interest of the distribution company to collaborate and work with the mini-grid companies to ensure that we jointly leverage on each other. I have an existing infrastructure today. The mini-grid have other sources to be able to ensure that I can make energy available for underserved areas. So collaboration is fantastic, is important. Second is joint ventures. I spoke about private equity firms. We can have joint ventures. The discos are not opposed to that. If you allow the mini-grids to support you in areas that you can't get into, and you have a workable agreement, then what that simply means is that when that time elapses, the disco can just take off from that part. So collaboration, I insist. The discos are open to it. The regulatory framework is there to support it, and everybody is ready to work. What we need is funding. And I'm hoping that there are people here today that are ready to come into the Nigerian market. The concerns that people had before with regards to policies, I think the government is very serious about that, and they've shown that. So there's a lot of opportunity, and I just thought there's an opportunity for me to also just kind of share that with people.
Even though we hear that people are actually paying and electrification is working, it would be so much simpler if there were easily available, accessible guarantees that actually are considering the risks that we have.
Everybody has access to energy. So this is about supporting families to get... The main thing that we're trying to remind everybody about is an incredible shift that we've seen over the last few years. We've seen governments and the World Bank alike realizing that distributed solar energy is the fastest, most affordable way to get people connected to basic energy services. And there have been some groundbreaking programs in the last couple of years that have increased our ability to scale solar energy by an order of magnitude. So in Nigeria, for example, we were distributing less than 20,000 solar home systems per month, but with the help of a World Bank and Government of Nigeria program starting in 2022, we multiplied that number by a factor of 5. So we were then installing over 80,000 solar home systems per month, meaning we're really moving towards getting access to energy for all 100 million Nigerians who need it. This program that started in 22 was just a pilot. So by the end of that program, we were scaling rapidly, but it was just a pilot. Tens of millions of dollars. But what World Bank and governments across sub-Saharan Africa are talking about here at these meetings is how to scale these programs up. And there's some incredibly exciting work going on in East Africa, in West Africa, multiple programs that are going to make distributed solar more affordable for people. Just bringing these products within reach of people that right now struggle to be able to afford them. It's absolutely, I think it's a successful week because we're seeing such interest here, these commitments from the banks, from the governments to work together to bring the public sector and the private sector together, and really just to make sure that we're helping families afford solar. So it's even less about the public sector and the private sector cooperating. It's more about the public sector helping the public afford energy.
There's an energy gap in Africa, and we would like to fill up this gap. It's really important because electricity it's not only about electricity. It's not a mere commodity. Electricity is very important for cooking, for everyday life. We don't realize every day once we have it, but once we are lacking electricity, life becomes really hard for people. And this is our message. Our main message is to say, okay, we want to tackle this energy gap access, and we want Africa to be fully independent, fully energized, in order to unlock the potential of the continent.
Yeah, it's really good.
Do you think there is a reason to be excited about where we're going as a continent?
I definitely think there is a reason to be excited. I mean, we have one of the youngest continent in the world, one that is vested in digital innovation, one that's really looking forward to homegrown solutions that's going to enable financial inclusion and economic empowerment of millions of people. So being here and making sure that the voice of Africa is heard is really, for me, opportunities for, hope that we will be able to drive the agendas that's needed for us in Africa, for more inclusion, for more economic empowerment, and for more innovations for Africa.
We're not just talking. In fact, we don't want to be at the table just talking. We're demanding solutions, outcomes, and proactive frameworks that can move Africa forward. And especially Sabine just mentioned financial inclusion. The hope is that we're prioritizing Africans on the continent and that by 2030, in light of the Sustainable Development Goals, every African country will have frameworks, opportunity, and concrete solutions on digital frameworks and policies.
Yesterday I was sitting here at the Knowledge Cafe, and I saw a woman who was leading the energy agenda in Nigeria and talking and presenting. And what I saw was a fierce leader presenting opportunities for the global industry to invest in Nigeria, to invest in Africa, because that's where the opportunities are for growth, for future growth. So I think that dynamic has changed. What we see now is not so much of a begging position, but more of a position to say we have a growing continent, we have opportunities, and we have also a youth that's very much well into bringing innovative solutions to Africa. What do you want to do, and how do you want to invest with us, and on what terms would that benefit Africa and all Africans? That's what I'm seeing now.
Talk to me about why you're here and what a successful week at the spring meetings would be for your company.
So I represent the World Association of Public-Private Partnership Units and Professionals, which is an organization based in Geneva with a global network of around 450 PPP professionals, 64 government PPP units. So those are agencies that actually do the procurement of infrastructure needs in the various countries. And yes, there is a big need for infrastructure. The gap is just growing by the year. And what we're trying to do is to promote best practices about that, advocate for next level PPPs, so those that are SDG driven, but also that apply climate resilience and build better contracts that make sure that we don't run into disputes all the time, which then unfortunately deflect badly on the reputation of PPPs. Public and private need to actually work together to deliver infrastructure, because it's only with the innovation and efficiency of the private sector that government sometimes can fill the needs. In the perfect world, we would have enough funding to finance all the projects that the public would like to have. But reality looks slightly differently, and that is why it's important to build capacity for better public-private partnerships. At least the World Bank and other multilateral institutions are involved in participating to co-finance these infrastructure deals. What is necessary is capacity on the ground, because often we lack appropriate understanding, experience on the ground in the field, and this is why we have an Africa chapter that is working with partners in the African region, with or without the MDBs, actually to try to resolve the challenges that climate change bring, but also making sure that we have the necessary social infrastructure in the countries.
Well, sadly, that's all we have time for you today. But as always, do get in touch with your comments and suggestions. I'll see you at the same time next week, back in the London studio for more in-depth business analysis on Channel's Business Global. Goodbye from Washington, DC.